Evening's outlook. Basically, today I like us to start, of course, from what happened last week and then till today, because last week we had three consecutive losses. If you had more than three losses, that means you took more than the signal that was dropped on the group, and that's actually normal. Yeah, as of last week, we were looking to buy, but the market told us it wanted to sell. And I don't know, as of Friday, Thursday, I did not have the time or chance to check the charts to look for, other selling opportunities, because I'm quite sure that if I had checked, we would have found some, somewhere here or here. We would have found an opportunity to join the already going down market. Here I can see some things here already. Either ways, that's part of the game. So that's just 3 losses out of all the wins we've had all the while. All things being equal, one good trade would recoup the loss from 3 consecutive losses. So not to waste much of time, we are here for our weekly outlook again. And as our custom is, we start from what? From the weekly, and then we proceed to the daily and then 4 hours. So we still have this support line. Don't let's call it support, because it can be support, it can be resistance. So we still have this zone marked out that overlaps with an imbalance. So that can make it a very strong support. And starting from, 3 weeks ago now, we've been looking at this. So meaning that all things being equal, the market wants to come, for this imbalance that overlaps with this support turned resistance. Now we are looking at it to turn support. And from what I said last week, when we were speculating for last week, I mentioned the fact that a previous weekly high has been taken, and all things being equal, when a previous weekly high is taken, the ideal target the market wants to go to should be the low of that same candle, right? And if we check it very carefully, the low of that candle has not been tagged yet. If you look at it very well, I'm sure you can see it. Market did not get to the low of this candle. And looking at how last week closed, we can easily conclude now, because for 2 reasons. You may not find this inside the textbook though. Last week closed, the body closed below the low of the previous week, which is this, and body wise it's closed below the open of this candle too. So these are things you may not find inside textbook, but they are part of it to also determine the direction of the market. That is to say that going into this week, we can speculate that we are looking for the market to do what? To move to the downside. And in moving to the downside, where are we expecting the market to get to? We're expecting the market to take this low first, and then, all of all this imbalance should be tagged and then taken out. However, let us go through the analysis again according to our checklist. So from the weekly time frame, the honest truth is that the weekly time frame is still very bullish, super bullish, as we can see. Before we can say we are bearish on the weekly time frame, we have to break the structure to the downside. However, like I established 2 weeks ago, the fact that the market is bullish does not mean that the market will not retrace. We know that the market is always moving in a zigzag manner: expansion, retracement, expansion, retracement. So what we can tell clearly on the weekly is that while the weekly is bullish, we are currently experiencing some retracements. And a retracement on the weekly time frame is a full trend on the 4-hour or the 2-hour. So the fact that we may want to join this buy to the upside, that does not mean that we should not attempt to maximize this retracement. So if we say that we are in a bearish market environment, we are speaking about short term. That is, we are trying to maximize this retracement. So hopefully when the market gets to this region, we can expect to see some movement back, to the something like this, to the upside. But until we see this happen, let us deal with what we can see here currently. But we know that this is so meaning that while this is what we are expecting, we can't just be watching the market move down and not participate. We can. In fact, on many ways, that is why we have smaller time frames, right? So trend, short-term trend is bearish. What is the short-term range? On the weekly time frame, we may not see a clear range, so we may have to go one time frame lower, which is to where? To the daily time frame. Correct. Now, looking at things now from the daily time frame, we can clearly tell that we have a very clear trend direction, which is what's bearish. So we can easily say that this is our trading range. As usual, what is the trading range? A trading range is a space within. If the market should go beyond those zones, the direction you are looking at is no longer valid. That is to say that the moment we get into this new week, if for any reason the market goes above this point and closes above it, our sell buyers may no longer be valid. That is what a trading range means. What that implies also is that we want to join the market to come down to first take out this low, right? And then to hopefully come into this imbalance before we continue. Before we continue back up to the upside. So what we are just trying to say is that it is inside this spot we'll be looking for the opportunity to sell and join the markets down. That's simply what a trading range means. So let us look for liquidity. First off is that we've marked one already. This is draw on liquidity as a target. There are 2 points of liquidity to identify whenever you are analyzing the markets. The one that the market has to take before it moves, and then the one the market has to go and take as the direction of the market. The market is always moving from one point of liquidity to another. On the daily time frame, we may not be able to clearly see any internal liquidity. So let us scale one more time frame lower to the 4-hour. All right, so looking at 4 hours now, 4-hour looks as though it's giving a confusing vibe in quotes, because on the 4-hour now it seems as though we have a minor breakout structure to the upside here. But don't let us rather lose track of our thoughts. What we are here to do is to identify internal liquidity. So from what I can actually see on the 4-hour, as of last week, there's every probability that we've swept all the form of internal liquidity that we ought to look at. But at least that one is certain. The markets will never move unless it has swept liquidity. Hopefully we have our boot camp soon so that I can explain some of all these concepts to those who may not know what it means. But to those who know what it means already, it's obvious that the market took internal liquidity, took all this, and that was why we began to see all these movements back to the downside. So what is the direction for this new week? While we can clearly establish that we are meant to move to the downside, it is quite tough to tell which direction specifically we should look out for on Monday. And mind you, Monday sometimes, as a trader, Monday sometimes is not a day you are meant to necessarily take a trade. Because sometimes the way Friday closes, Friday can be very not specific. So you have to wait for Monday, sometimes wait for Tuesday, just like we had last week, before you then know what to do in the markets. So looking at the markets clearly now from the 4-hour time frame, it looks super confusing because it's closed within a range. But if we say we now want to scale to some time frames lower, looking at 1 hour. So clearly on the 1 hour now, we have a break of structure to the downside. Further doing what? Further confirming our bearish bias. So what do I do on Monday? Personally, as an individual, on Monday, I'll most likely expect a retracement into this region, wait for another sweep of liquidity, and then most likely join the market to the downside. Ideally, this is scenario number 1. But scenario number 2 is that I may wait for Monday itself to finish forming before I now then decide on what to do. And what will I be expecting from Monday? I'll most likely be expecting a move down to close below this level, fully confirming the fact that we want to continue to the downside, expect a retracement, and then I continue to join the market back to the downside. So basically, Euro USD for this week, we are expecting movement to the downside. We can confidently say that is our bias for the week. But what we can't clearly define yet is where we want to join the market. Because when you look at the 1 hour now, from various perspectives, we can tell that number 1, we have that break of structure to the downside here. Secondly, we have this imbalance here. For those of us who clearly understand the concept of imbalance, right? And this is an imbalance that also overlaps with, an order block. So that can make this point very strong. Reiterating what I spoke about again, that we can just have something like this. So what do? Since this is 1 hour, we exercise patience. Let the market open. The fact is that until the market opens, we don't know where it is going. So if we get a retracement back into this imbalance, this is an internal liquidity right here. The high of this candle is an internal liquidity. So the market takes it. We can scale to 15 minutes time frame to hope for some sweep of liquidity, change of character, break of structure, anyone you know it as, to the downside, and then we can capitalize on the move to the downside. So basically, that's just it for Euro USD this week. No special ambiguity. The only thing I'm just saying, which I wish we did last week, is okay, even having had the weekly outlook, there are times that the markets can now say that, oh, okay, although it looked as though I was going to go to the downside, but on Monday or Tuesday, markets can just give us something different entirely to say that I want to begin to move to the upside. So this is where flexibility comes in. You don't just insist that because our original outlook. I always like to always chip this part in because yes, most times, does our outlook for the week play out entirely? Yes. But that doesn't mean we should shut our mind to the fact that we have to be flexible. We are not saying that the market will do this. No, we are only saying that we need to keep that possibility in our mind. Because if you don't keep that possibility in your mind will shut it out. This is trading. Unlike other industry, it's very easy to just pick one direction and follow it through. And then you catch yourself incurring unnecessary losses. when you find yourself in a situation whereby what you ought to be is to be flexible. So right now, everything is pointing to the downside. We have equal lows or relative equal lows, which are always sweet spots that the market wants to get to. But until it is taken, we cannot conclude that this is what the market wants to do. So for now, our outlook rather for Euro USD is simple to the downside until the market says otherwise. So let us check our second asset, which is USD Sometimes USD is often usually the opposite of Euro USD, because for USD is the base currency, and for Euro USD is the quote currency. So it's more like sometimes or oftentimes USD is doing the opposite of what Euro USD is doing. Okay, so looking at this from the weekly time frame, fortunately for us, USD is also bearish, like clearly bearish. But let us go to the daily time frame for more context. All right, so while USD is bearish, it looks super confusing. Like when you go to the line chart now, it looks as though we have a minor break of structure on the daily time frame. But however, don't get it twisted, this is the main structure over here. So what this implies is that until the market closes above this place, we can't say that we have moved back to the upside. So what should I be expecting on USD on what's the name this coming week? The honest truth is I would have to wait, because this market is very choppy, like super choppy. So what I want to do is, because we have speaking about the concept of liquidity here, so we have a sweep of external liquidity already, and the market is always moving from one point of liquidity to another point of liquidity. So the market has swept external liquidity. If this market will continue to move to the downside, let us follow the storyline. Let's build the bias. Market swept internal liquidity here, came for external liquidity. I do hope some of us get this concept. Internal liquidity was taken right here. This is how you can just easily predict the direction. So after market has taken internal liquidity, the next point is external. Now market has taken external, right? For us to continue to the downside, the market has to take another internal. This is something you can beat your chest on. You may not be able to beat your chest on what direction the market wants to take categorically, but when it comes to the concept of liquidity, trust me, the market books on liquidity. So even if we want to continue to the downside, I would expect to see the market get to spots like this, and then I would scale to the lower time frame, which is 15 minutes. If you can check my charts very well, you realize that the least time frame, Siri, yeah, no call you. So meaning that I would want to see, as you can clearly see, this is a retracement. So I want to see the market take internal liquidity and most likely do what? Give me some change of character to the downside, and then I join the market down again. It's that simple. So fortunately, Euro USD, we are bearish. USD CAD, we are bearish. That's contradicting, but of course, the market does so sometimes. So I'll be expecting the market to do this. Long story short, is that I want liquidity to take out, and not to be blind. This also already is another form of internal liquidity already. This one right here. So that is to say that one of these three lines, I would want to see the market get there, give a displacement to the downside, and then I move down. So how do I confirm my entry? I've spoken about it here already. Market picks a liquidity, displaces to the downside. I enter on retracement. It's that simple. Yeah, I've noticed that there is something that gets people scary in these markets. In a situation whereby, market takes an internal liquidity, breaks structure to the downside, comes back to take this point. Ideally, market should not come here, right? But comes to take this point, breaks the structure to the downside before continuing again. The fact is, if the market chooses to behave this way, that's the market. That's part of the reasons why we have risk management. Are there days that just one sweep of internal liquidity is okay for the market? Like the market does something like this and it moves. Yes. And are there days that the market will take internal liquidity twice? Yes. So the fact is, it is not given to you to know when the market wants to sweep liquidity twice. That is why there is what is called risk management. That is why there is what is called risk to reward ratio. Okay, take a look at this. In fact, this is a very clear example right here. Let's take this off. So, over here, this is when you switch to the line chart. So this is a sweep of liquidity, break of structure to the downside. You enter upon retracement, isn't it? And you had some great, risk to reward, blah, 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 down to this point. That's on 1 ratio 3.5, yeah? Over here, I hope you know that the market has swept internal liquidity and it has broken structure also to the downside. So what do I want to do? Ideally, I want to put my stop loss, and I say stop loss, my entry, maybe at this imbalance that aligns with the other block, my stop loss there, and my take profits maybe somewhere. Initially, the market got there, acted as though it was going down. You see this, you feel fly like, correct. I don't shop this one, I won't shop this one too. But look at what the market did. The market took the eye of that liquidity again. Just like over here, the market did not bother to come to this point again. From here, I don't also know that the market, nobody knows. That is why there's risk management. But if you look at it very well, the market took that liquidity, did what? Broke structure to the downside again, and now gave you that entry opportunity again. So if you were afraid because of the first loss and you didn't take this second one, can you see how you missed out of, you lost 1%, but you've made 4% back. So that's why I'm not bothered about the loss of last week. We made 3 losses, right? But fact is, just one good trade will recoup everything. So, expecting markets to take internal liquidity, and then you are afraid that what if the market takes it and then comes to take it again? Then I enter again. But what if the market does not take it? Then you stay out and then you miss. That's hesitation from the fear of loss. Men and brethren, it's obvious you can't play this game without loss. So, except you have any other question, I think I'll just let me do this so let me just take all of them that way, and then so this is what we are expecting. Oh, I shouldn't have come for USDCAD, and then we also have what we are expecting also for EURUSD. I don't trade more than 2 assets actually. There are those who can trade more than 2. For me, I don't have that capacity. Once they pass through, my head will edit me. So for EURUSD downside, USDCAD downside. These are our expectations. So maybe this week we will also now implement the act of having follow-up conversation in respect to what the market is now doing, maybe in agreement with our previous outlook or a new market environment entirely. So any question from anyone before we close the curtain for tonight?
Can you hear me? Hello, can you hear me?
Yes, 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 I can hear you.
All right. So you made mention of something the other time when you were
Okay.
talking about um whether knowing the direction of the trade you take on Friday or you wait till Monday to see the direction of the market before you decide on what to trade. Which one do you think is more preferable?
I
Do
don't
you
hear
always
you.
recommend waiting to see what they look like before you trade?
Oh, okay. Um, it depends on how the market closes on Friday. That's it. So, I want to look for a very clear example because we had one some weeks ago. I think that was 2 weeks ago. Oh, Jesus. I just want to put context around it so that you can then understand what I'm saying. That's the previous week, is 1 week. This is another week, and let's check this one too. So let's go to the daily time frame. All right, so excuse me. Looking at this week, this is Monday, so this is Friday. This is Monday, and this is Friday. I'm sure if you look beneath, you can see like if you look here, you would see as I move the crosshair around, you can see the dates and the day. So this particular week closed, Friday closed super bullish, clearly bullish. So fact is that we can go into Monday, the next day, or for the entire week, confidently looking for buys. And if you look at what happened that week, what happened throughout that week, we had buys all through from Monday down to Friday. Yeah, Monday was a buy, Tuesday was a retracement, Wednesday was a buy, Thursday was another retracement, and then Friday was a buy. So entirely for that week, we had buys. Why could we conclude that, oh, this week was going to buy completely? Because of how Friday closed. Fully bullish. But what we are saying is that there are days that Friday will close in a very indecisive manner because we have what are called structural levels. So this right here is a structural level. This particular candle high, that's a structural level that the markets broke above it. Let me give it a different color. Yeah, so that, let's take this off for now. Hide, good. So you can see that the markets went above this point and closed above it. But in this situation, if you look at this particular candle, this one over here, this red one, you realize that the market did not close above it. Neither did the market close below it. If the market closed above it, we could pick a direction with a level of confidence. If the market also closed below it, we could pick a direction with a level of confidence, but the market closed within it. So that's what we call range. So in a range, you really can't confidently tell what you need to do until the market breaks out of the range. So all the speculations we had were just speculations within a lower time frame, because sometimes even when the market is within a range, a lower time frame can give you a direction towards what to expect. So that is why for me in this situation, a lower time frame confirmation is very, very important. I don't know if that sounds clear to you. So in
Yeah,
situations whereby Friday is super indecisive in its closure, we just have to wait for Monday. But in a situation whereby, like this week, it was so clear that the market broke that structural level to the upside. So we can confidently tell that, oh, throughout this week, oh, all we want to look for is buys, and you can see that we had it. So that's that about that. All right. So any other question from anyone? You are welcome, sir. Okay, so we have actually less than 2 minutes on this Zoom too, and we have our outlook already. So as usual, as the markets evolve in the course of the week, I'll keep us updated on the group as and mind you, it's just that I can't be sharing my account with you guys. Maybe I'll do that once in a while. There's no loss I post on the group that I don't incur personally. So I'm not an audio trader. So when we make profit, I make profit. When we lose, I lose. So that's how it is. I wish we all a very profitable week ahead. For those of us who have trading routines, let's not forget to play by them. At the end of the day, trading is more psychological than it is technical. So I wish us a very, very productive week ahead, guys. Stay chest and God bless.